Hello, everybody. Welcome to the Fundamental Analysis webinar this afternoon. My name is Troy. I'll be presenting the session. I'm a senior account manager with AvaTrade. As we get going, let's do a quick systems check just to make sure all is up and running smoothly. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great, thank you. I've got enough responses. Looks like we're up and running fine. If anyone runs into any issues as we go along, please let me know. So it's a good time for fundamental analysis with the US elections having such issues going on. The markets are definitely responding to some of the results that are known and also to some of the results that are unknown. So it'll be an interesting week or two or even longer as all of that works itself out. And obviously there's some other things going on as well. The Bank of England agreeing to some more stimulus and some announcements that have come in. So we'll take a look at what's happening with the fundamentals, and then we'll jump on the charts. We'll take a look on my demo at some of the live movements and see maybe some opportunities that some of you might be interested in trading on potentially. As we get going, keep in mind, as do all investments, trading on FX, spread betting, options trading, all of these types of investments and trades have risk, obviously. There is no guarantee of profit on any one trade. But the good thing is there is the potential for nice profit on each and every trade. And so the idea is manage the risk in a way that makes sense for you while going after those nice potential profits. And so there are different ways to manage risk, obviously. You can use stop loss marks. You can set up hedge positions with pending orders, some different ideas. One that's unique to AvaTrade, one way of managing risk that is, would be using the AvaTrade Go mobile app or the web trader platform that AvaTrade has built. And on those platforms, you have the option for what's called Ava Protect. This is a protection feature that allows you on gold, silver, all the FX pairings to purchase for a small premium protection against any and all losses for defined time periods. And so it's a nice feature, especially during times like now where there's expected high volatility. And we'll take a look at the volatility index, and you will see that the volatility is quite high today. And so, and maybe not high, but moving. It's actually dropped quite a bit today in terms of the volatility, but it's a large movement in volatility. And so that tends to drive movements on the charts that really can become quite predictable. So we'll take a look at that as we go along. Keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective to help you build upon or develop your trading strategies. Now, I know that some of you are new to things that are in the webinars. That's perfectly okay. We take things step by step. And if you haven't opened a live account, that's okay as well. Eventually, I believe that you will. Some of the features we look at today, you'll see are only available on the live account. So to really get a full feel of everything, you might go ahead and do a live account if you haven't yet. Now, Declan, I'm not sure if you're hearing things right now. Let me just address. There's someone saying doesn't have sound. Okay, so I'm just letting Declan know to check his side because he's having some issues with audio. All right, so fundamental analysis, what is it? Fundamental analysis is basically looking at the news, right? And we're going to do that shortly. And it's looking at what's happening either with regular economic events, like we'll look at some scheduled announcements that have come out today already and that will come out later today. And so those types of fundamental events, you know exactly what they are. You know exactly when they are. And so you can account for the timing of those things within your trading strategies quite easily. Other types of fundamental analysis involve looking at extraordinary events, like breaking news about the US election would be the most expected thing right now, that you don't know what headline might break about whether maybe Biden officially wins the election, or what new lawsuits there are challenging the election results. There will be breaking news, I'm sure, and you don't know what the headline will be or when it will be, right? And so that's what we might call an extraordinary economic event, where you don't know the exact headline it will be, and you don't know the exact timing, but you still can account for that within your trading strategy, a lot of times with pending orders, when you find price levels that you think big news could cause them to break. And so we'll look at some ideas in that regard too. And so some other fundamental news that would maybe be classified as extraordinary, the FOMC meeting tonight is scheduled, right? But we don't know for sure what all they'll talk about. So there could be some news about interest rates staying the same, changing. There also could be news or talk about other policy ideas moving forward that we aren't sure what they'll talk about. So big news day. There's a lot going on, and so let's get into it now. If we jump to AvaTrade's main website, what you'll see is, if you look at the trading platforms, you'll see the AvaTrade Go app here. If you haven't put this app on your mobile devices, I recommend that you do. It's very useful. The order window has the Ava Protect feature we were talking about. You can protect trades for a defined cost, for a premium cost for defined time periods. And so if you're uncertain about the volatility, or that a move could swing the wrong way, it's a nice protection feature that you could consider using on gold, silver, and FX pairings. Also, you'll notice on the AvaGo app that when you program the take profit and the stop loss, it calculates for you based on the trade size you're setting up in that order window. It tells you, here's how much you would stand to lose to your stop loss price. Here's how much you'd stand to make to your take profit price. And you can play with that with the trade size until you see the amount of risk that you wanted. Okay, so very useful. The order window in the app doubles as a trade calculator. And you'll see, if you log in here from the main website, you're in this platform, the web trader platform. And Declan, I'm glad you're reconnected. And so the web trader platform has those same features in the order window. So let's say you want to trade on the NASDAQ, okay? Here you are. If I say, okay, I want a take profit at a certain price, maybe I say 12,500. Okay, there's how much I'd make with the current trade size. What if I said, no, I want a bigger trade size. I'll do 0.05 lots. Well, here's how much I'd make. Calculated to my account currency, 2025. And you see it's moving because the price is moving. It's adjusting immediately the estimate of what you'd make at that take profit price. Your stop loss, same thing. Okay, you program your stop loss price here. Maybe you say, okay, 11,900 would be my stop loss price. I'm risking 975. Maybe you say, oh, I like the possible profit, but I didn't want to risk that much. So then maybe you lower the trade size. And now I say, okay, now I'm only risking 570 something. Maybe that is acceptable to you. So before you ever buy or sell on a move, you can know exactly the risk to your stop loss price, your potential profit to your take profit price, etc. Okay, very useful. And it's the same in the AvaTrade Go mobile app. What if you want to do a pending order? What if you said, well, I want to sell, but only when the price hits 12,200. Okay, fine. So you click execute when price hits 12,200. Okay, that's it. So, and you can say, I only want it to activate if it's within a certain date range. You can program a date. for it to cancel itself if it hasn't hit the price by then. So you'll notice that in the MT4 platform, when you program your pending orders, you have to tell it, if you're selling, you have to tell it, okay, is it a pending order that's a sell limit or a sell stop? And those of you that are new to things, there are 4 types of pending orders: sell limit, sell stop, buy limit, buy stop. And it gets complicated if you don't understand which one's which. It's very simple on the web trader platform and in the AvaTrade Go mobile app. You just say execute when the price hits and you put the price, and that's it. You don't have to know that, okay, selling from a higher price than it is now, which is what this is a sell limit. You don't ever have to pick sell limit or sell stop, etc., because the web trader platform and the AvaTrade Go mobile app are smart enough to know, okay, if you're picking this price to sell from, it automatically makes it. If you look in your MT4, then after you execute this, you'll see, yeah, it prepared a sell limit. It'll tell you that it's a sell limit. But you don't ever have to pick or see that within this platform. Okay, so very nice features. And if you pick an asset that has AvaProtect, like gold, you see NASDAQ didn't offer AvaProtect, but if I pick gold, and where did I put it? There it is. Okay, so if I'm going to place a trade on gold, you see the gold shield here, and just happens to be gold colored. It's a gold shield no matter which asset is offering the AvaProtect. You see the shield, the gold shield, and that means AvaProtect is available on that asset. And if you choose that option, you pick the duration. Okay, if I'm doing a scalping move, okay, I could cover it for 3 hours for $37 with 5 ounces of gold. Okay, maybe it's before the FOMC meeting and you think gold could go flying $50 an ounce in one direction, but you're afraid it could go the other way too, and so you protect it for a flat cost. You could go after huge potential profit over that course of time. Maybe you're looking at a longer term move and you want to go 6 hours or 1 day or 2 days, etc. The coverage can go the time periods that are available to choose from, and the price changes obviously as you have longer or shorter covered time periods. Any losses during that time period would be added back to your account if you add the protection to your trade. Okay, so very cool features for risk management. Since we're talking about fundamental news today, what you'll notice is we offer on the live accounts, those of you that are only operating on a demo account, you'll need to get a live account to use the Trading Central features. Trading Central is like a paid service for most brokers if they're offering it. This is free. We provide this free on all live accounts because it is a paid service. AvaTrade, it incurs costs for AvaTrade. We don't have it on demo accounts, but it is available on all live accounts for free to all of our clients. You'll see the economic calendar, Forex featured ideas, analyst views. I mean, look, it's like your own signals. I click on analyst views. It tells you right here. You pick the asset. It gives you your technical analysis breakthrough move. It's recommending what direction, what prices in and out. This is your signal for free. Signals right here, right? So you see the move. You can go enter in your trades if you like the ideas. The fundamental news, take a look at this, market buzz. Okay, maybe you're thinking about, it just takes a second to load. Maybe you're thinking about trading on, I don't know, Facebook. Okay, look how many articles are out there on Facebook right now. We can click on that bubble and say, okay, what's going on? US futures jump as potential Washington gridlock signals. You say, okay, that's interesting. Maybe that's helping Facebook go up. US futures are jumping. What's it say? Why, this article is saying that there's positive sentiment because of gridlock in Washington. The Republicans are going to hold the Senate in the US. The Democrats are going to hold the House. That creates gridlock. So why is that deemed positive? Does anyone have any ideas? We can click on the story. Watch how easy this is to get the fundamental news behind what's going on. I click on see more, and it takes us to the article. There it is. Stocks futures jump as potential Washington gridlock signals less regulatory risk. So, Declan, no, this is not a few days behind. This is updated right here on the 5th. You see that? November 5th. So these articles are relevant. The gridlock is now. Okay. It's possible, Declan, it's possible there are some older articles there too that might still be relevant. That's why they would still be there. You know, you see 217 articles, they're not all from today. So there's relevant articles. You probably want to look at the more recent dates, maybe to see what might change right now. But the fundamental news, why is gridlock in Washington good? They're telling you there's less risk of regulatory changes, right? That if the House, if Congress is divided in the U.S., it doesn't matter who's president. If Joe Biden said, hey, I'm going to raise taxes and increase regulations and undo everything Trump did to get rid of regulations and lower taxes, if that's his plan, he can't do it without getting the Senate to cooperate with him. So investors saw that the Republicans held the Senate and said, okay, even though Biden said he'd raise taxes on corporations, even if he wins, they're saying because Republicans held the Senate, that they don't think there's a risk of the taxes going up. So boom, Wall Street's rising. And so the headlines tell you that. Read through the article. This is what they explain. Okay. And so, and you can look through all kinds of fundamental news through this feature. Now, if you want to do your own search, which I did, okay, I pulled up articles myself as well outside of the platform. And you take a look and you say, look, first thing on investing.com, what do you see? European stocks higher, and they say one of the reasons, US gridlock. And the Bank of England is doing more stimulus, which is nice for the European and UK regions. And so more stimulus, hey, that helps the markets go green. And apparent gridlock coming in the US between the House and Senate is signaling positive momentum for holding on to the corporate tax cuts and the deregulation that Trump got through while he was president. He still is. Who knows for how long? I should say while he is president. If we take a look, here's another headline, another source. It's good to look at more than one source with your fundamental news. So we're looking at Reuters now. It says investors welcome U.S. election gridlock. So when they say retreat from blue wave bets, a blue wave, for those of you that don't understand, the U.S. red is for Republicans, blue is for Democrats, and many were thinking there would be a blue wave and the Democrats would take over the Senate and the House and the presidency. And if that had happened, you would see the opposite reaction from the markets likely with a sell-off in the stocks and the indices, because they would say, oh, it's certain that taxes will go up and regulations will go up if the Democrats had taken over the Senate as well. But because the Republicans held, as we already discussed, there's expected gridlock, meaning no blue wave taking over the entire government, meaning taxes on corporations likely will stay with the cuts that have occurred, at least in the short term, and increases in regulation might be slow to come. So the markets like that. That's what these articles in multiple sources are explaining. And another article here, Biden edging oh so close to getting 270. If I had to take a guess, I think he gets it. But I also understand there are multiple protests. I shouldn't say protest. Well, there are protests, but there are multiple lawsuits being filed by the Trump side, protesting the counting of the mailed-in ballots and the processes that occurred and the timing of the votes. So it's going to be a battle here as to the final result being agreed upon in the end of who won this election. Even if Biden tips over 270 electoral votes, there's going to be all kinds of contested states and ballot counting and all of that going on. So it's definitely what they're calling gridlock at this point. All right, so with that understanding of what's happening with the fundamentals, we can see why the futures have been green all day. Okay, and so the futures have been green because positive momentum with everything we just talked about, right? And if we look, volatility is down. Usually that's what happens, right? Volatility index is the fear index. It's a slang term for the volatility index. The VIX 500 is the fear index. And so fear is down almost 10% right now. So what happens when fear is down? People tend to buy into the equities, into the stocks, the riskier assets, and up they go again today, right? And so, you know, fear can change quick. And if the volatility is way down today, right? Big movement in volatility on the downside, it easily could come swinging back up tomorrow with some new headline, right? Some different breaking news, that other type of fundamental news that we talked about, the unexpected kind. So you have to be ready that there could be big reversals as well in this momentum. But right now, if you're scalping, the momentum has been up to take quick trades in and out through the day today. Okay, so I'm just reading a couple questions or comments that are coming in. Ebert, if your trading central's not loading for you, please talk with your account manager, okay? He'll get a hold of support and make sure things are working for you. All right, so there are some announcements that came in. If we look at the economic calendar, mixed news, a slew of red announcements here between the European Union, 1, 2, 3, 4 bad announcements coming out of the European Union. German factory orders not up as much as expected, and you know, we've got more news coming, but retail sales were down in the European Union as well, month to month and year to year, not up as much as expected. So some negative momentum there on the euro from fundamental news. Positive announcements for GBP, the pound's been strengthening because of the quantitative easing, the extra stimulus that the Bank of England has promised could come in. I should say stimulus, not quantitative easing. So, and then later today, look at the announcements coming out of the U.S. Jobless claims, non-farm productivity, unit labor costs, and FOMC statement, interest rate decision, FOMC press conference all coming out of the US through the day today. So huge, huge, huge potential for movement on the markets, especially the major indices. And I would say the safe haven assets like gold as well, and oil, because of these announcements coming out of the US. Major, major announcements through the day today as we progress through the evening time and nighttime. So keep that in mind, that there's positive momentum now. The VIX index is way down and the futures are green, and likely the US market could open green today. All right. With that said, with those announcements coming later today, there's the potential for huge reversals. Okay. Any questions or comments as we get on the live charts? We'll start looking at potential entry points, exit points with the understanding of the fundamentals now. Certainly, Amir, we can look at gold. Let's look at gold. So I've got the GBP JPY up. Let me pull up gold. Okay, so this is interesting. We drew a potential buy stop in the last webinar, I think it was, and you see the breakthrough line here, and we said buy stop from this spot up here. You see the line we drew up, and we see, look at this breakthrough candle. Broke through, and it broke through the next resistance as well and popped up on the 1 hour candles. So it broke above here, broke back below, and then plowed right through again. Let's go to the 4 hour candles. I think we'll get a better look at the bigger picture on gold. Get rid of some of these lines. And by the way, just to get rid of these lines on the MT4, you double click and then you can delete them. Double click, then right click. So here's the upper resistance on gold. It's got some room to go before it reaches that resistance level up here. Now, question is there enough momentum for it to continue to climb? And what's interesting is some of you might be thinking, well, if the volatility is way down, we looked at the VIX index, it's down like 10%, which means fear is dropping. Why is gold climbing? And I would say because it's been bizarro world for trying to compare fear and gold movement ever since the pandemic hit. What we've seen is gold has moved with the markets ever since the pandemic hit. So meaning as the markets were crashing, gold dropped way down also. And as the markets have gone up like they are now, gold has followed it up. And you can speculate as to why would gold rise when fear is down? Why would gold rise as the markets are rising? And you probably could come up with half a dozen different reasons. One might be the higher the markets get, the more folks are expecting a potential large pullback. Could be. And so whatever the case may be, gold has been moving along with the markets. As they go up, so too has gold. And that happened again today. It was in the last webinar that we looked at the same pattern. And so if we want to, let's do a split view. We've got gold, and let's take a look at one of the indices like the NASDAQ. And I think this will be interesting. So if we look at the NASDAQ and we look at gold, let's put them both on 4-hour candles. Then it looks the same, right? NASDAQ up, 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 gold up, up, up. Let's go to 15-minute candles on both. Okay, we see gold has kind of capped itself here with a bit of a resistance and started to pull back down. So the NASDAQ seems to have slowed a bit. And so if we want to draw a line on the NASDAQ, there's the high point on the NASDAQ. So if gold is pulled down, and if we've noticed that these tend to follow each other, then maybe you expect maybe a pullback down of the NASDAQ, okay? And if you're thinking, okay, gold is leading here, pulling down, NASDAQ is slowed, then you could say, you know, fundamentally, these two have followed each other for whatever reason. Technically, we can see it on the charts. And so if I say I want maybe NASDAQ and I take a sell on NASDAQ for whatever trade size is right. And so there we see it starting to push down, following gold that it had already dropped, right? And then you say, well, how much would I be willing to risk on this? Well, you could just do a scalp move where I'm putting my stop loss just above the high point. If it breaks the high point, then okay, you're wrong. It's not a significant pullback yet. So you could have a small risk. I could put this at 12,120 or something like that to get above that high point, which we're hoping with a move like this would be a resistance point. So 12,120. Okay, there's my stop loss, and maybe I want to drag it just a little bit above that wick, a little bit higher, so 120 something. And where would my take profit be? Maybe the first support level, so 12,050. And you might be thinking, okay, this is a great technical strategy. What's this have to do with fundamentals? Well, we just looked at the fundamentals, and we understand fundamentally with the news why the markets went up. But we also understand fundamentally that there's a lot of confusion as to what's going on in the US elections, and there's still fear about the pandemic, and the virus has been spreading worse in different places. So it makes sense that if you see a relationship between two assets, like gold and the NASDAQ, and you see one following the other consistently, and one makes a big move and the other one didn't yet, it makes sense to try and take advantage of that relationship as maybe a predictive tool, while also taking into account the fundamental situation that you say, okay, I understand the momentum that occurred. I can see the momentum has died. And I also understand the bigger picture that there's still some fear on the markets about things. And so this is just kind of a limited type scalp move that you could throw into your repertoire of strategies for trading. Now, let's go back to gold and look at it a bit bigger picture. I do see that when we looked at the 4-hour candles, there's a resistance level up here on gold, okay? If gold breaks this resistance, we see this was a spot where it hit and dropped, right? Now it hit and pulled back again. If it breaks above that line, let's say gold hits this price here, 1920, then it broke this resistance that it bounced down from, this resistance here that we see at this wick and here. Okay, so if it does break through, you could have a buy stop pending order right up here, ready to go with the take profit before this resistance at the top. Okay, and that type of breakthrough easily could occur with the type of news that is yet to come today. The news about possible interest rate decisions in the US, the FOMC committee rate decision, and meetings and talks that will go on today. So trading with what's known now, that we've got a resistance level, we've got momentum that we understand, and we've got a pullback that looks like it is starting to occur. So that's one move. Preparing for the unknown. We don't know what will happen with the FOMC statement exactly, but if it creates enough momentum to break this resistance level, then gold looks like you could get a breakthrough candle potentially through this resistance if the news goes the right way for that. And so triggering a buy stop up here could pay out nicely. So if we then go to gold and bring that up for a pending order. Remember, on the web trader, you don't have to pick what kind of pending order, right? Or on the AvaTrade Go mobile app, you don't have to. This is a buy stop pending order. So what's the at price, which is the only part you need to put in the web trader? The at price would be somewhere up here, 1920, right? 1920 and a half, maybe, to make sure you're through that resistance. So at price 1920.5, okay. Make sure I'm on the right side of the decimal here. 1920 and 50 cents. If it triggers my buy position up here by breaking through the resistance, then my stop loss would make sense to have back below that level. So maybe 18.50. So risking $2 to the stop loss per ounce. 1918.5. $2 per ounce risk. Potential profit 1930.5 is before that resistance level up there. So the potential profit here is, I made the same mistake with my decimal, 1930.5. The potential profit then is $10 per ounce. Our risk is $2 per ounce. That's 5-to-1 potential profit with that entry point compared to risk. So if this breaks through, then great. We see the NASDAQ pulling down, right? So if you're a scalper, you say, okay, let me close that. I took my $6 profit. It was a small trade, right? With my demo balance being over 100,000, had I done a one-lot trade, that would have been a more significant scalp. But we could see it was predictive in that case. We saw that gold made a move down. The NASDAQ had not yet. They followed each other all day today. So gold plunged down. We took a shot at NASDAQ to pull down, and that's exactly what it did. Okay, and we took that. That's a combination of fundamental news and a technical strategy where you understand the fundamental relationship exists between two assets, in this case, NASDAQ and gold. One made the move. They tend to follow each other of late. So you you take that as a signal that maybe the other will move a certain way, and there it went, okay? So great scalping strategies when you can compare two charts. And if you know they are related to each other, other relationships fundamentally, Australian JPY and the China 50. Why are those related fundamentally? What are the fundamentals behind that? Since we're talking about fundamental analysis in this webinar, use a technical strategy like we did just now with gold and NASDAQ, but with Australian dollar and China 50. Why? Because Australia's #1 buyer of their #1 exports is China. So if China's economy is doing really well and the China 50 is rising, so too many times does the Australian dollar. Because then the idea here is Australia will be selling more exports to China if China's doing well, iron ore, coal, etc. And so we tend to see that type of fundamental relationship between different assets many times. Another would be the Canadian dollar and oil. Okay, #1 GDP producer for Canada, oil exports. Oil prices go up, Canadian dollar tends to want to strengthen. Not always, but many times. It can improve your win percentage. So if you compare those charts side by side, understanding they have a fundamental relationship and one moves before the other, maybe you'll more often be able to win if you go in the direction that the fundamentals would tell you the other asset should also move. Okay, just an idea to use fundamental relationships between assets then to help you enact your technical analysis strategy. Okay, so let me pause. Any questions, comments on that idea that we carried out with gold and NASDAQ, but that occurs between many fundamentally related assets? Yeah, sure, I can show you the fear index, otherwise really known as the VIX Volatility Index, right here. Okay, so fear is still down about 9%. It was down over 10, 12% earlier. So that's the pullback. That's the pullback. The volatility was trying to go back up some, which is why it went from -12 or so to -9. So that means the markets then start to pull down. Okay. Amir, we talked a little bit about that already. The markets really weren't as concerned about who won the presidency, but were more concerned about whether the pro-economic growth policies would stay intact. So if the markets believed Biden was going to win the election, but that also the Democrats would win the majority in the Senate and the House, the markets would likely be reacting the opposite of what you see now. The positive momentum, according to many experts and articles we've looked at, the positive momentum on the markets right now is the fact that investors are rejoicing that the Republicans held the Senate, and that Biden presidency would not mean that he can just quickly ram through higher taxes on corporations, higher regulations, etc. He can't do that without cooperation between the House of Representatives, which is Democrat run, and the Senate, which is still held a majority by the Republicans. And so the markets love the idea of divided government in the US right now. And that's exactly what we've got. So that's what's happening. And so how does that relate to gold? What's been happening with gold is as the markets go up, as we already looked at, gold has been going up. And if you expect a big pullback in the market, gold has been pulling back with the markets these past months, ever since the pandemic. Eventually, that relationship may flip back to the normal relationship we used to see, where gold goes up when the markets drop and gold goes down when the markets go up. But that has not been the case these past months with the pandemic. People have actually wanted to liquidate their gold to have cash on hand when fear was going up and the markets were crashing. So if people are liquidating gold when the markets are crashing because they want cash in hand, that makes gold prices drop. So a lot of that was going on through the pandemic and seems to still be going on because the pandemic obviously is still going on. It's one related factor anyways to what we've seen between the relationship between the markets rising and gold rising with it, or dropping and gold dropping with it. Good questions. Okay, so what are we looking at here then? We've got a buy stop prepared in case some of the big news today breaks that resistance. We'd be in on a buy, risking only to the underside of the broken resistance and potential profit being much larger to the next resistance level. And maybe I say, you know what, I want my stop loss to be a little more patient, and I slide it a little bit further away. So if it triggers my buy, it could dip down a little and I could still stay with it. I still have a much better potential profit than I'm risking to my stop loss if my buy position opens on a broken resistance level here. Okay. Let's take a look at oil. We'll bring up crude oil. And what do we see with oil? It also went up with the markets. Makes sense fundamentally, right? If there's positive momentum about the economy and the markets, that tends to drive oil price up. And that occurred today, the typical relationship we see. Oil reached this resistance level here. Why is this a resistance level? Look here, it's an old support level. Support, support, support. It kept hitting that price and bouncing up again and again, bouncing up. Once it broke below that, that becomes resistance. And there it is. Oil's momentum died right at that resistance level. So now you could say, if I expect a bit of a pullback in the market now, I could sell on oil. Okay, so let's say maybe I go a little bigger here. I'm going to go 0.2, right? That's 200 barrels. Okay, so I sell on oil. I say, okay, how long will I stay with this? Because I could be wrong, right? If it breaks this resistance level, that's probably a spot where I would say, okay, the momentum didn't die yet. So I'd be willing to admit I was wrong if it breaks that resistance level. So if it gets up to 39.5, I might say, okay, I'm out. Okay, so that's not risking so much. So so I go back, I'll put my trailing, or I'm sorry, my stop loss. I could put a trailing stop if I want. So if I say 39.5, there's my stop loss. Okay, stop loss up here, it would have to break this resistance. Maybe I look over here and I say, you know what, there's another resistance level here a little bit higher. So maybe I say, you know what, I'll be a little more patient. I'll put it above that one. If it breaks that one, then I'm out. So that's more of a longer term move. I'm willing to have my stop loss past one resistance level, past two resistance levels before I give up. So where would I want my take profit? Maybe the first support level I see, which is down about here. Okay, you see it broke through here, it pulled back, bounced off that price and went up. So that's about double the potential profit compared to what I'm risking. So if I say take profit around 37.40, it would be just below this little support level down here. So I come in, modify, take profit, 37.40. And so now I have my take profit in a spot that strategically seems to make sense. I've got my stop loss backed up by 1, 2 resistance levels before I would give up on the move. And if the market continues to pull back, giving back some of the gains that it had today, then easily you could hit this take profit here. And you know, a 2-to-1 reward to risk. It's a nice technical entry point if you're looking at the technical analysis of things. So that's a nice little setup, understanding why the momentum occurred today, but also why it could die down. Fundamentally speaking, there is a pandemic still. So short-term momentum, we understand the fundamentals on that. Longer-term type moves, bigger picture idea, still a pandemic, still, you know, the UK going into lockdowns again. That's not going to help oil prices continue the momentum, those sorts of things, right? So fundamentally, this isn't a bad move to bank on maybe a pullback on the momentum here that already occurred today. Okay, and we see we're starting into a small amount of profit early on. Any questions, comments on anything before we maybe look at one more asset? Anyone have an asset they'd like to look at? Which instrument would you like to trade on? Declan, good question. Should we wait for the election results before buying more stocks? That's the question that's being asked. I don't think that's necessary. You can if you want, but the final results of this election could be months away, because the Trump side is going to take this all the way to the Supreme Court. They're protesting any votes being counted past election day. They're going to look at each and every mailed-in ballot for proper signatures, for proper everything. They're not going to let anything slide. So there will be a recount in Wisconsin. That's already been requested by the Trump side. So who knows who's going to win in the end, right? I think likely Biden will end up being the winner. But there's going to be a lot of protests. And if there's anything about Trump, you know he doesn't back down from things. And I don't see him backing down from this. So it could get pretty ugly and dragged out. And if you're holding off on trading on stocks until that decision, I think you're going to miss a lot of opportunity. Yeah, Declan, he's not going to go without a fight. You know, I jokingly say if January 20th Biden is inaugurated, they might have to go in and drag Trump out of the White House. I'm joking, but the idea is he's going to fight every inch of the way until he gets the decision he thinks maybe is just, and maybe things won't go his way, but it'll be interesting to watch this whole battle as it goes through. I think this creates a lot of opportunity on the markets for big movements, right? And so prepare your pending orders. If you don't know which way it will go, fundamentally, that's where pending orders come in. Put your buy stops above the resistance levels. Put your sell stop pending orders below the support levels, and wait for the breakthroughs that come with whatever headline hits, right? That's how you prepare for that other kind of fundamental news, that extraordinary fundamental news. If we want an example of that, let's do an example. How can we prepare for something regarding the US elections that we have no idea what the headline will be or when it will come? So let's look at the Dow Jones. Okay, we see the Dow Jones has upward momentum. We see a resistance level up here. Okay, we see a support level it broke through here. Okay, it took a lot of momentum to get above this resistance level. Okay, this was support, and then the support broke here, and it became what should have been resistance. But look at the size of this candle. It broke through with a lot of momentum and got back above. What do you think it will take to break back below this support level now? A large amount of momentum, right? So if it takes a large amount of momentum, yeah, our gold buy triggered, right? Our gold buy triggered. So we're in on the momentum on gold up. If the Dow Jones breaks this support level, then that means there must have been bad news on the market. Whatever happens with the election in the US, if this support level breaks, there must have been fundamental news to reverse this momentum, whatever that fundamental news will be. And so you could put a pending order at 27,840, and if it breaks that support and hits it, then you're in on a sell with whatever fundamental news caused that support level to break. So we go pending order. I don't have to predict what is going to happen with the election, but I know at 27.8, let's even say 830 to make sure the support level is really broken. I know if this pending order hits, this sell stop will be placed. Okay, if this momentum reverses enough to break this support level and hit this price, then that triggers my sell stop, and I'm in on whatever fundamental news caused that support level to break. Okay, and I could put my stop loss back above that broken support, which would then be at 27,990. Maybe I say 28,000 even, since it's an even number. So I could say Dow Jones pending sell stop. If it goes back up to 28,000 plus, maybe 28,100, then I would give up on the sell, and my take profit could be down at a major support level down here, 27,100. If there was really bad news for the market. So there we're prepared for a reversal. If it comes down, breaks this support level, let me maybe slide this down a little further. At price, let's say 27,800, just to make sure we're below that support there. So now it truly, if it hits this line, it broke this support level from up here. And then you're in with about double the potential profit, even better than that, compared to what you're risking back up here. Okay, and that's just waiting for the fundamental news to hit in case it's going to hit. And look at our oil. Look at the pullback on oil. We already can scalp our profit, right? There's our $10 profit on oil, or what could be more, depends what trade size you took, right? Again, just going with what we know about the fundamentals and applying also technical strategies at the proper price levels, and there you go. All right, so we've got a sell stop ready in case the market reverses. And to buy right now might be tough. After all that climbing already, you make that decision. If you want to go with the current momentum up, you could do a market move, right? But we're prepared for the unknown down here with our pending order. Okay, everybody, thank you for joining. Thank you for the suggestions and the input. It's also very helpful. We'll be doing the next webinar next Tuesday, and it's at 6 p.m. London time next Tuesday. From now on, the webinars are scheduled Tuesday, Thursday. Tuesdays are the later session, and Thursdays are at this time, a bit earlier. All right, everybody, thank you for attending, and good luck with your trading today. I think you've got a lot of potential today for breakthroughs and large bounces because of those major announcements coming later today. So get yourself in the market if you like some of what you see. All right, bye for now. Declan, my name is Troy. My name is Troy. Okay, bye everybody.